You set your stop loss, watch the price drop down to clip it by a single pip, and then instantly watch it rocket in your direction. It feels deliberate. That sudden, frustrating market spike sweeping your liquidity before a violent reversal is a classic stop hunt. When you rely on visual estimates and arbitrary support lines drawn across a chart, you leave yourself exposed to these unpredictable wicks. You are essentially guessing where the market's momentum will exhaust itself. This diagram shows a standard price chart resolving into an XABCD harmonic pattern. By applying quantitative ratio markers to these pivots, we move from observing erratic price movement to measuring a consistent geometric structure. Surviving a modern, high-volatility environment means moving past visual guesswork. You have to adopt a system rooted in precise, calculated mathematical probabilities. Every harmonic sequence starts with an impulsive move, the XA leg. The first correction's depth, the B point, dictates the sequence. A 0.618 retracement builds a Gartley. 0.382 or 0.50 morphs into a bat. If the completion pushes beyond the X point, it's a butterfly or crab. Correctly measuring this initial geometric anchor prevents you from chasing a phantom setup. It defines the strict parameters you need to calculate your eventual entry point. This diagram shows the potential reversal zone, or PRZ. We aren't looking for a single price threshold, but a multi-level cluster acting as a net. This zone reaches high probability only when 3 distinct Fibonacci levels perfectly overlap within that tight window. Getting price into the zone isn't an excuse to execute immediately. You must verify market exhaustion by checking momentum oscillators like RSI for divergence. We also require geometric maturity. If your initial upward legs took 20 candles to form, but the final drop into your zone took only 3, the timing is broken. A valid setup demands that the chronological timing of the pattern's legs remains relatively symmetrical. You combine the spatial map of the PRZ with the temporal filters of momentum and time. That combination separates a calculated trade entry from an impulsive trap. A mechanical flaw in retail trading: if your PRZ is 5 pips wide, a standard bid-ask spread consumes the majority of that range. A zero-spread environment preserves your geometric safe zone, letting you place limit orders at exact Fibonacci levels without early triggers. To survive deep liquidity sweeps, you have to place your stop-loss orders intelligently. We deploy them slightly beyond the mathematical extension boundaries, such as the 1.13 Fibonacci level, to act as a buffer against institutional wicking. If the price decisively closes past those final mathematical boundaries, the geometric trade setup is completely and structurally dead. The geometry has failed, a new trend has begun, and the setup must be abandoned. Achieving true surgical precision in your daily trading requires perfectly merging strict harmonic geometry with uncompromised, lightning-fast execution mechanics. Grab the Harmonic Pattern cheat sheet and open a zero-spread demo account to begin calculating your exact entries today.